your own business is exciting, but let's be real, nobody enjoys talking about tax. In fact, the topic confuses most people. Yet, tax compliance is one of the most critical aspects of your business. It can make or break the success and the longevity of your business. Anything from applying for government contracts to getting external investors to even simply avoiding penalties, tax compliance is very, very important. Do not fret because I am simplifying tax for you today. I'm going to tell you the 5 key tax obligations that any startup needs. In fact, any new business, whether you're in the tech industry or otherwise, the 5 key tax obligations that you have, who you're supposed to pay to, how much you're supposed to pay, when you're supposed to pay, and how you're supposed to pay it. I'm going to tell you the common tax mistakes that businesses make and how you can avoid making those mistakes. And I'm also going to tell you the key tax strategies that you can implement to scale efficiently and maximize your tax incentives wherever and whenever you can. Hey guys, I'm Noma Grace, a corporate and tech lawyer passionate about helping startups, founders, and businesses to start, grow, and scale their businesses in a legally sustainable way. And in this video, we are breaking down taxation. Yes, the confusing topic that is tax. Let's dive right in. I won't go into the definition of taxes because I assume everyone knows what a tax is, nor will I go into the reasons why tax compliance is very important for you as a business, no matter how big or small you are. Because if you do not pay taxes, there are a slew of consequences waiting for you. So let's not go into that. Let's go right into the meat of why we are here, the reason why we are here, which are the 5 key taxes that every business needs to know and needs to understand and needs to file for them to even start talking about tax compliance. The very first one is company income tax, CIT. Now, again, please, disclaimer, I'm speaking specifically to Nigerians now, especially when I speak about the percentages or how much we're supposed to pay, when we're supposed to pay. I'm speaking specifically to Nigerians. In other countries, they might have their own version of a corporate income tax, or they might have their own version of value-added taxes or withholding taxes or any of the other taxes that I would mention here. But the percentages, again, are specific to Nigeria and Nigerians. So please, just a little disclaimer. Moving on, corporate income tax. Now, corporate income tax, or CIT, it is a levy that is meant to be paid by every single registered enterprise in Nigeria. Whether you were registered today or you were registered all the way back in 1960, it does not matter. You are subject to corporate income tax. However, now this is where it gets interesting. Corporate income tax, or the levying of corporate income tax, is broken into 3 stages. If you are a small company in Nigeria, that means you make less than 25 million naira per annum, you are not subject to pay corporate income tax. That is, you are exempt from paying it. That means if you make 24,990,000 naira a year, then you will not pay corporate income tax. So from 25 million naira and below in revenue, in annual revenue, then you are not subject or you are exempt from paying corporate income tax. Now we move into the second tier. If you make between 30 to 100 million naira annually, then you are subject to pay corporate income tax, but you are only paying 20%. So if you make 99 million naira now, for instance, in a year, what is 20% of 99 million naira? And that will be your corporate income tax. Moving on to the third tier is like the big businesses, those that make 100 million and above, all the way up to infinity. If your business falls into that category, then you are subject to a 30% corporate income tax levy on your business, or on that income or on that revenue that you have generated in that year. Corporate income tax is filed annually. It's filed every single year, and it's filed, or the best time to file it is within 6 months after the end of the financial year. Now, in Nigeria and in most other countries, I presume, their financial years run from 1st of January till December 31st. Now, if that is the traditional financial year that we have, then the appropriate time to file your corporate income tax is between January till June. Within that period, it is assumed, or it is presumed, that you would have, number one, held your annual general meeting. Number two, you would have audited your taxes, your finances for the previous year, and you would have, if you have dividends and if you're, declaring dividends for that year, you would have, done all of that, divided your revenue from your profit and your expenses, you've cleared your certain debts, you've done, it is assumed that all of that has been done. Now, whatever profit you have, whatever revenue you have, you are now 100% sure of it. And out of that revenue, you're able to say, okay, I made this amount and this amount goes to taxes. So ideally, you're supposed to file your corporate income tax within the month of January all the way down to June. It should not exceed June. It shouldn't even reach June. In fact, file it in before March to just be on the safest side. Just file your corporate income taxes before March. Now, if you are a company that, again, you're making less than 25 million naira a year, it is still important for you to file taxes. Why? Because you need to file these taxes. Whether or not you made zero, submit that you made nothing. Submit nil, rather than saying, oh, I didn't make up to 25 million, so therefore I wouldn't file anything. That would not fly, because when you're coming then to file it later on, they'll say, okay, you've been in business since 2022. How come you didn't file 2022, 23, 24, 25, and you're coming in 27 and you're filing taxes? What happened to the previous years? And then that raises question, and then you look like you're lying when you say, oh, I made less than. Nobody wants any of that. No, nobody wants all that drama. So file it annually. Even if you're filing nil, even if you're submitting zero, file it regardless. Give it to a tax consultant and they will figure it out for you. The second key tax to note as a business is value added tax. Now, this is a tax that is levied on the consumption of goods and services, and it's 7.5%. So any goods that or any service that you have consumed in the month is subject to tax. It doesn't matter whether or not you're paying company income tax. It does not matter. As long as you have consumed a good or a service, then you are liable to pay 7.5% tax. Whether even if you've sold one, then the person buying from you ought to have paid a 7.5% tax. And as a business or as a business owner, it is your responsibility to add the taxes to the cost of the good, so that whoever is paying it pays it once and for all. So value added tax, is 7.5%. It is a tax that is levied on the consumption of goods and services, whether you're the one selling or you're the one buying. Either way, everything is subject to 7.5% tax. And you're supposed to file it the 21st of every month. The 21st of every month. Now, corporate income tax, we file it annually. It's an annual thing. Value-added tax is filed every month. Before the 21st of every month, you are supposed to file your value-added taxes for that year. Now, even if you say, oh, my business didn't buy anything from anyone, it didn't, consume anything from anyone, it didn't sell anything to anyone, still file it. File nil. It's better to file nil than to leave it empty and not file it at all, because the truth of the matter is that it keeps piling up for you. So if you opened your business we're in 2025 now. If you opened your business in December 2024, value-added tax records have started counting for you. Now, if we're in March now, then you are of a deficit of 3 months, December, January, and February, 3 months, because we haven't gotten to March 21st yet. So you are in deficit of 3 months. So you need to file your value-added taxes every single month. Get to a tax consultant and they would help you out with it. The third essential tax that every business owner needs to be aware of is pay as you earn, otherwise called PAYE in Nigeria. Now, this tax is an employee tax if your startup or your business has employees. Now, I'm not talking about contract staff or independent contractors or any other third party that you work with. No, I mean people that are actually categorized as employees. That means they collect a wage from you, they collect salary from your company on a monthly basis. They are supposed to pay as you earn tax on that salary. It's supposed to be removed from the salary and then they are given their take-home pay. The rate for pay as you earn it's on a graduated scale. That means it increases as the months go by and as your earnings accumulate, and so does pay as you earn increase. So it goes anything from 7% of your pay all the way up to 24%. So again, please, go to a tax consultant and they will help you figure out how to actively or accurately calculate PAYE, because if you do it by yourself, it can get quite confusing. when you do it by yourself. So go to a tax consultant that you trust, or you can also go to a lawyer who, does taxation for clients and stuff like that, and they will help you figure it out and plan it out accurately. Pay as you earn, or PAYE, is supposed to be filed on the 10th of every month. So again, similarly to VAT, it's filed every single month. The next we have is withholding tax. Now, this one can, confuse quite a number of people. And I understand why, because they're like, oh, it's not a separate type of tax. It's like a tax that is used to, curb income tax evasion and, all that confusing grammar. But the simple truth, or the simple explanation of withholding tax, is that exactly as the name is, it is an amount that is withheld from your savings or from your fees, or from the money paid to you for a service rendered. It's a money withheld from the total amount and used for your income tax, or put into or paid as income tax for you. Because again, it's very easy for people to evade paying their income taxes, paying their personal income taxes. It's very easy. So withholding taxes were introduced as a system, or as a tool to curb that. What that means is that when you're paid a certain amount for the delivery of any good or any service, depending on what the law says, depending on which services are taxable and otherwise, if you're paid for that service, automatically between 5 to 15%, depending on, number one, who is the recipient of the money, whether it's an individual or a company, and what exactly the service being rendered is. Anything from Withholding tax ranges anything from 5% to 15%. So once you receive your money, once you receive your pay to render that good or that service, automatically 5%, if you're an individual, is taken away and withheld by the government, or by the person that is paying you. That amount is taken and is withheld and is added to you as credit for payment of your income tax. Payment of your income tax. Simple as that. The fifth essential tax obligation that every business needs to know about is personal income tax. Personal income tax, as the name goes, is a tax that you as a person are liable to pay, whether you have a business or otherwise. It's meant for sole proprietors and co. You are personally meant to pay this tax. Again, similar to PAYE, it happens on a graduated scale from 7% to 24%, depending on the income that you receive. And unlike PAYE, it's meant to be filed annually. Let us recap. The 5 essential taxes that every business needs to know, regardless of your niche or industry. Number 1, company income tax. Who pays company income tax? Every single company that is registered under Nigerian law. Company income tax is divided into 3 tiers. Tier 1 are the small businesses. So if you earn 25 million naira and below, you are exempt from paying company income tax. The second tier is companies that earn from between 25 million naira and 100 million naira annually. They are subject to 20% company income tax, and it is paid annually. The third tier are companies that make 100 million naira and above. They are subject to 30% company income tax. Company income tax is meant to be paid annually. The best way is to pay your corporate income tax within 6 months of the end of the financial year, of the previous financial year. So let's say a financial year is from January 1st to December 31st. The ideal time to file your corporate income tax is from January all the way down to June. It should not exceed June and last for the whole year. The second tax is value-added tax. Value-added tax is a tax levied on all goods and services consumed by people. It doesn't matter what good it is, except those, obviously exempted by the law. It is 7.5% and it is paid monthly on the 21st of every single month. The third is pay as you earn. These are taxes, these are employee taxes that every employer needs to pay. So once you have a staff or an employee, you are meant to pay PAYE, that's pay as you earn tax, on their income or on their monthly salary. It's on a graduated scale of 7 to 24%, depending on how much you earn, what month it is, and all that. It is again supposed to be filed monthly on the 10th of every single month, because by that 10th it's assumed that every single person has been paid their monthly salary for the preceding month. The fourth one, is withholding tax. Now, withholding tax is a tool that is used to curb income tax evasion. It's like when you pay someone anything, it ranges again from, I I think it's 2%. Apologies, I think I made a mistake earlier. It's 2%. It ranges from 2% to 15%, depending on the recipient of the money and the transaction in question. It ranges from 2% to 15%. And it is a tax that is, used again as credit or removed, withheld as a tool to curb income tax evasion. Now, the fifth one is personal income tax. As the name sounds, it is personal income tax. You personally, you are supposed to pay that. So if you have a sole proprietorship, a business thing, whatever the case may be, or even if you're simply an individual carrying on business, doesn't really matter. You are subject to pay personal income tax. And again, similar to PAYE, it's on a graduated scale of 7% to 24%, depending on how much you earn and what month it is. And again, but unlike PAYE though, it's paid annually. Paid annually. So two taxes are paid annually, which is company income tax and personal income tax. They are paid annually. VAT, PAYE, and withholding tax, they are paid on a monthly basis. Now, these are the general taxes that you need to know about. The rest are industry specific. So unless you're in a certain type of industry, you wouldn't necessarily need to worry about other types of taxes. So, but these 5 are the general ones. The rest, like I said, are industry specific. So what industry are you in and what taxes are applicable in your industry?